Hey, good afternoon, everyone. Welcome back to another bar by bar analysis. Happy Friday. Today is March 11th, 2022, and I just want to get straight into it. Today, the initial part of the morning, I was trading the current March contract, March 2022 contract, and then as the day progressed, I started to see a little bit more volatility, too much volatility, and I saw price action on the June contract look a little bit cleaner. I saw better setups, and so I ended up changing over to the June contract. So this initial bar by bar analysis will start with that in mind. Is we'll focus on this March contract, and then around the time where I started to notice prices stagnate a little bit, I'll show you kind of where what I was thinking and when I switched over to the June contract. So I came in, initially drew my level of resistance and level of support down here. I saw clear downtrend, prices holding below EMA here, so I'm thinking second entry shorts or failed second entry longs up towards the top of this channel or EMA. So market opens and prices continue to start to trend. We have a new low here, first entry short. Prices come back down and make a new low, so the count is reset. I'm not seeing anything I like here. Bars are kind of stagnant, a little bit of congestion, but prices are respecting this EMA. Prices immediately fall. I'm noticing that. We have a new low here, and honestly, something I should be doing is drawing in these short-term trends. So we got one trend moving up here, new low, first entry short. Prices push above EMA, second entry short. The only thing that's keeping me out of this is this short-term trend line I drew in. Um, I know some people might do something like this, right? We can't really neglect these two bars though. If it was this bearish bar and then this bullish bar next to each other and these bars didn't exist, then maybe you can do something steeper, but we've got some doji candles here and we just have to incorporate that data when we're making our decisions. So as tempting as a second entry short like this could be, you're fighting against this short-term trend, so you just got to be careful of that. And that's what would have, I think, kept me out of that trade. Next bar, Prince, and I don't even think you get a trigger, right? Do prices tick below? Channel's kind of in the way. I think you barely, I actually really can't tell. I think it ticks down, so some people would have gotten into that trade. I saw prices push above, nice bullish bar. It ticks up, trapping all these people going long, and reverses and closes below EMA. Based off of this short-term trend, we also have a slight break and a new high, barely by a tick. Um, but I ended up taking this trade here. Um, Somewhat of a break, new high. It's not really a second entry short because the second entry short triggered on this bar. But when I saw this play out, I thought that's an aggressive trade that I would take my chances on just because this is also the first time we broke this downtrend looking to make a new low. And so I ended up trading this and I had a nice runner of about 10 points before it stopped that runner out. And it was a relatively slow morning. Market opened at 8:30 and it took about 22 minutes sitting here watching all of this unfold. So the market was relatively slow. There we get our new low. Prices continue to push down. I actually wouldn't even extend this really because we had a break new low. So now once we have this break and new low of this overall downtrend, we're looking for we want to see how prices are going to react to the EMA because realistically we could be looking at a reversal here. We could see prices push back above EMA. And if it holds, if prices hold above EMA as we continue to get more price action, more data, that's when we could be looking for longs. So it's just something that we have to consider. We're not looking to take any more shorts. From the looks of it, the downtrend played out. We want to see how prices react to EMA. We have a new low here. First entry short immediately falls. Now, after we had this break in new low, we anticipated for prices to come back to the EMA. We were looking for prices to see if they were going to push above the EMA, but it broke and made a new low. So as we continue to make new lows on this trend, we could be dealing with a a larger downtrend, and it has to be something we consider. And so we have to start thinking, okay, well, could we have a trend line that maybe looks something like this, right? I don't know if I can maybe color it just a little bit so you guys can see this blue one versus this red one, right? Which one is gonna win? We need more data to find out. So kind of sitting on our hands here. We're not making any trades. We're seeing how prices react here at the EMA. First entry short here. But we also start to see bars overlap. And what time was this in the day? 9:15, roughly an hour and 15 minutes I'm sorry, 45 minutes into market open here. Um, this is where I started to see prices get a little bit stagnant, right? We have one, two, three touches here at the top. Um, New low, first entry short, and prices never trigger up. There's that triggers up, second entry short, but you don't want to be going short here at the bottom of this. I would argue almost like a range, a very small congestive range. Um, you have first entry short, prices pull back up and push back down. If it ticks below second entry short, you would be in this trade. Um, but again, with range rules, you don't want to be going short at the bottom of this support. If you were going to take a trade like this, you'd want to be at the top. You'd want to be at the resistance, taking a short like that. But I don't want to belabor that point too much. I just saw overlapping bars. I didn't like it. It looked congestive. I stayed out of it. We also have a new high first entry, second entry long coming up here. And again, we want to see how prices are going to react at the EMA. See a bit of a pullback here. First entry short, and nothing's really spotted, right? We don't see anything we want to take. First entry prices coming back up. Second entry short, potential 1, 2, 3, 4 touches here, but you are above the EMA, and you have to consider you can either start maybe right here is where prices start to move up. You're going against a downtrend. I'm sorry, you're going against this short-term trend moving up. So it is something to consider. Um, I think if I saw this real time, I don't think I would trade this, but I also wouldn't be upset if someone did. I could understand why someone would trade it. It is aggressive. You're above EMA. I think I would personally just stay out of it. It works. I think people have enough room back to the EMA, but we had a break of the short-term uptrend looking for a new high. First entry, second entry, long potentially. And so something we can do is kind of just prepare ourselves, see what we have going on here, because as prices came down through this EMA, we were anticipating they were going to come back to this side of the trend of the channel, but they didn't. They kind of held around this midsection. They're pushing back up. Um, so this, some people could treat this as a failed second entry short. You have the new low. Wait, where is the new low? I guess this is the new low. First entry short, second entry short, failure. So some people maybe would go long here, but I don't like it because you're going long straight into the top of this channel. So you just got to sit on your hands. You got to wait. Prices move up. You get the scalp. And prices continue to kind of work around this 200 EMA that I have drawn in. We have a new low first, second entry short, but again, we're not looking to we're not looking to trade against the trend. We have somewhat of an uptrend here. Kind of when I look back, we got a touch here, 2, 3 touches here at the bottom. That's a little bit of congestion that we had. And I actually think, if I remember correctly, I think it was around this time of the day where I started to see prices moving the way they were. And I was like, we could potentially be looking to roll over and look at the other contract. And so what did I pulled up this. This is the June contract, and I saw similar downtrend, but I didn't start. I don't think I started the downtrend at the top. I think I started it kind of down here. I want prices fitting as nicely as they can, right? And what time? Let me it's around this 9:57. If I kind of fast forward 9:30, 9:40. Let's stop here a second. Um, so when I was looking at this, I thought, okay, how are we going to draw a trend line that incorporates touches at the bottoms, touches at the top? You got to kind of find it. Price action can be kind of iffy when you have low volume. For example, yesterday when people were trading the contract, the June contract, this was the only data they had for the whole day. That's just not enough volume, right? And so as the day progresses and more volume starts to come in, that's when we see price action making a little bit more sense. And what I was seeing here was this was another touch confirming this channel with prices holding at the bottom, but I saw the prices kind of start to round out near the bottom here. And so I thought, okay, we could be looking to reverse to the upside. If we draw in some data here, drawing some trend lines, we had a little bit of a short-term uptrend moving up. Slight break to a new high. First entry, where's that first entry short? I wonder if it maybe ticked one low. First entry short comes up, second entry short at the top of this trading range, and some people maybe took that for the new contract at 942. But on the March contract, 942 looked like this, and you'd be trading against this uptrend. So it got kind of iffy, and people might have different trades, but from here on out is where I was trading the June contract. So new high, first entry long, and prices continue to move up. And then what I see is starting from the bottom here, I want to start drawing an uptrend because that's what it looks like we have kind of out of this range. And it's tentative, right? But with prices rounding out here at the bottom, we wanted to see prices come back down and test the bottom here. We wanted to see them touch the bottom here and they didn't. Prices started to round out. So I thought, okay, we could be looking to go higher. And first entry short, second entry short never triggers, but we have a first entry long, second entry long, but that's not a good signal bar. I'm gonna keep going here. As prices continue to move up, see if I can make this just a little bit bigger so it makes more sense. And we tick, but we're also starting to see momentum kind of fade to the long side. Prices are holding above EMA. Some people might see this. If you saw this early enough, I guess you could treat that as a higher low, the nice bullish signal bar. So people probably went long there, but that's kind of hard to, it was hard for me to see in the moment. I didn't end up taking something like that. We have a bit of a clean break with prices moving down. We want to see if we're going to reach a new high here. We don't. Prices actually hold. And I kind of fast forward a little bit too much, but if you saw something like this happen, you have first entry long coming back down, second entry long triggers by a tick. It triggers by a tick. It's attempting to go long, but this is also a lower high. This bar right here is a lower high. And if you put your entry one tick below, or even if you try for a one tick retracement on a limit order, that could be a good trade to take. Maybe slightly aggressive, but you're trapping people that are trying to go long here. And so as it reverses, people are sweating and they get trapped out because they tried picking a bottom. They're trading counter trend. So if we drew something like this and you know, we want to be professional traders. We don't want to be amateurs. We have to think very clearly about the context, overall context and structure, right? We have a new high, first entry long, second entry long. Some people are going to really like this signal bar because it looks good, and they're going to put their entry one tick above it, and it's going to go up and it's going to reverse on them and it's going to fail. So we wanna try and eye those traps. We want to look at those failures. On top of that, we had this big downtrend with a break outside of the trend, looking for that new low. So that just gives you a little bit more confidence in, hey, prices are most likely going to move down. You get your scalp, prices come back up to test the EMA. You have a new low, first entry, second entry short, but I'm not going to go short below that bullish bar. And prices are starting to range. It looks like a little bit more is kind of what I'm seeing. When prices move above EMA, below EMA, slightly above, below. Let's see if prices hold. So prices are holding at the EMA here. So I start kind of drawing other things. Could we be looking at a bigger pattern start to form? Could we have something like this? Because we had a break of this short-term downtrend, looking for a new low, still looking for an overall new extreme of this downtrend. Break, looking for that new extreme. Prices continue to fall. And when we look back, is there really a way to enter this? To be honest, no. I don't see anything that, unless you can maybe think, oh, I'm going to be aggressive here and take a lower high, but I'm not really a fan of it. Maybe if you did slight, right, slight STT up, break, new high, prices pull back down below EMA, lower high, that's the only way you could have entered that. But it's hard to see that real time. So that's why post analysis is still important, right? When we see after the fact, we have to ask ourselves, how would we have entered that trade? And we have to train our eyes to be able to see that. So I won't mark it because I didn't see it in the moment, but that could be a trade that people take. Prices holding below EMA. We're looking for an overall new low of this downtrend. You know what? I will leave it marked just in case people want to see, but that's what I see there. Now prices, as they start to make this new low here, we want prices fitting neatly in this channel, and it fits as neatly as it can. New low, first entry, and that makes a new low here. Now, once this new low was made of this overall downtrend, I'm not necessarily looking for shorts anymore. I kind of want to see prices push back up above the EMA um, and reverse. That's at least what I'm thinking is going to happen. And I didn't put it on this chart, but we still have our level of resistance and level of support when we think about where price is going to go. We want to think about the target. We want to have that idea in the back of our minds, right? We came from the highs trading down to the lows of this support. So we still have room to the bottom, but I'm hesitant to go short. Next bar. First entry short, prices come up above EMA, strong bearish bar down. I'm not looking to go short. You almost see bars start to congest a little bit. We had that new high first entry long, but we're not looking to go long. Even if we do get, this nice bullish bar, we're not going to try going long. As we get more data, we adapt, right? Now, we do have to be careful about moving our trend line, because this could have been a break and new low. So this downtrend right here could have played out already. And we want to see how prices will react here at the EMA. First entry short, second entry short, but I'm still not going to take it for that very reason. We were moving in the downtrend. We had a break, new low. Break, new low, attempt at another, and we actually did make a new low, but another attempt at a new low. I almost see this as like a double bottom, right? I see maybe something like that. So I'm not looking to go short into that. Yeah, I'm not looking to go short below this bar. It never even triggers, so got nothing to worry about. But new low first entry, we are looking for a second entry short. And what I'm almost hoping is that we get a failure, that this second entry short fails, we get a good signal bar, and we'll try going long. That's my thought process. But prices continue to go back down below EMA after the fact. But you can kind of see a little range here. Just want to try and clean it up just a little bit. So break of this short-term trend, new low, continuing to make new lows. So that we know a bigger pattern's at play here, a wider channel is at play. Break, new low, attempt at a new low, continuing to push low below EMA. And so we start saying, okay, well, how can we incorporate more prices? If prices are going to continue to push lower, we want to be a part of, we want to understand what's going on. We also don't want it to get too crowded with stuff, right? So we're trying to find touches at the top here. We could have break new low, so this downtrend could be played out. We want to see how prices react at EMA. So prices are going to continue to come back up. From a new high, first entry long, price come back down. Second entry long, it's kind of far. This could be one worth taking. It could be a little bit aggressive, but the way I see it is we had this downtrend. It played out with a break and new low near the bottom of the overall trading day. We have a new low here. So we know that downtrend has played out. We're looking for prices to push back up above EMA. And first entry long, second entry long. You would have got it. You wouldn't scalp. You would have scalped out if you took that trade. That's what I saw. And as predicted, prices are now holding above EMA. So we've kind of confirmed, at least for now, with the data we have, we confirmed that this downtrend has played out. Prices are pushing above EMA and holding. So what do we want to do? STT up. That's a higher low. I it's a weird spot to be. You see this higher low with a nice bullish bar. Some people might take that if they couldn't get into this one. I think it's a little risky, might be a little bit too early because we also have this trading range, right? We could just be pulling back into this trading range, and I don't want to go long into the top of this resistance. And I that would have kept me out because it ticks up one and then reverses, right? We would be going long in the middle of this trading range, and we don't want that. So we just want to sit on our hands, see how prices play out. We have a break of this short-term uptrend. We're looking for a new high of this uptrend. We get the new high. So now we'd be anticipating for prices to reverse, come back down, right? Simple price action, following the rules the best we can. New high, first entry long, second entry long. Break, new high, uptrend is played out. People could get trapped here. I'm not going to go long here. But at the same time, now that I extend it just a little bit, I see prices. Ooh, look at that. Look at that. We could still be in this. This could be our new channel, right? This could be that third touch confirming this channel. It's a risky one, but when I draw it like that, it kind of looks nice. The only thing I would be wary of is short-term trends, slight break, new low. Let's see what happens. Prices push up, and you would have gotten that point for that higher low. Second entry long setup, second entry long, first entry long, second entry long. Prices now come back up. Break of this uptrend. Looking for that new high, but as prices come back up to test this EMA, it fails and prices push back down. New high, first entry long, second entry long, but terrible signal bar to try going short. This one here, we have new high, first entry long, pullback, second entry long, failure. Prices are holding at the EMA. We also have new low, first entry short, second entry short, nice signal bar to go short. I think if I saw that real time, I would take it. And you would have gotten a nice scalp out of that. Some people might see this, right? Extension of this trading range and be like, I'm scared of going short into that. And that's very valid. That's very valid. I don't know if I would have seen it like that. How far does this trading range go? It's kind of hard. It's subjective, right? We don't exactly know until we get more data. We do have a double bottom here now that's formed. Prices push above EMA, so we got a new low. How did that second entry, new low, first entry short, hidden second entry short, but it's an inside bar on the EMA, kind of flattening out. Even if we did extend this range, you're almost in the center of this trading range, right? Now that we have more data and we can see prices aren't continuing to push back up, but they're actually respecting this resistance level that we have. Middle of the trading range it's very, very aggressive. I think these are the types of trades that if you take on a continuous basis, you're going to get stopped out. Um, you're going to break even, I should say, after long periods of trading, because some of these trades you'll win, but then others you'll lose. So I'd stay away of trading something like that if we have this established trading range. But I could see why some people would take it. New high, first entry long, prices push back down below EMA. We don't want to forget that rule, right? If we traded down into a trading range, we're mostly going to trade down and out of a trading range. So I'd be very hesitant about buying any failed breakouts back into the range here. See, even though it's a nice, good green signal bar off the bottom here of this level, this resistance level, sorry, off this support level for the day, I'm very hesitant to go long here. So people that do take this trade are in this trade right now and it's reversing on them. They're in this trade a little bit too longer. They're in this trade a little too long than they like to be. And boom, they would have gotten stopped out here. This is why I don't trust these things. Got to be very careful about trading counter trend. What do we see? Starting from the high here, be a nice short-term downtrend here with a break in new low. There's that new low. Maybe prices are going to reverse back into the trading range. We just have to let things play out. We're continuously making newer lows. So as we make newer lows, we got to try and adjust. We want as much price action as we can. This channel doesn't look as great. Prices coming back up to the EMA. First entry short and new lows start to form. So as these new lows start to form, how wide is this channel? It's something that we have to think about. Okay, and then by this time, the day is over. Now, most people would have stopped trading earlier in the day, but that's what I saw. Based on our price action, we had trades in the morning here. Not too many though. I think one aggressive trade, and then some people might have taken a trade somewhere in here, like a higher low, second entry long, first entry, second entry long off this uptrend. Some people would have seen that. I think it's very hard to see in the moment because you're also at the top of this level of resistance in this channel. So a few trades in the morning that people might have forced, a few aggressive trades, and then as the day went on, we got a few more trades. So I hope all of you have a really good weekend. I hope you enjoyed the video, you got something from it. Again, if you do enjoy these videos, please leave a like, leave a comment. Let me know how it's helping you. If you see something during the video that you don't like, or that you do like, and it's an analysis you agree with or you don't agree with, start a conversation with me. Let's talk about it. I like analyzing these charts. I find it very enjoyable. Next week, I don't think I'm going to be able to put out a video on Wednesday and Thursday of next week, but I'm going to do my absolute best to get as many videos out as I can, because I really enjoy doing these videos and I know it's helping a lot of new traders and even traders that have been around for a while and they just need another perspective and see how another person trades the market. Um, I know it helps people. So that's all I got. Please make sure to subscribe, turn on post notifications so as soon as these videos post, you're able to watch them. So, all right, guys, have a good rest of your day.